There's a highway in Monterey that didn't exist 3 years ago. 4 lanes, smooth asphalt, LED lighting that makes it look like something out of Singapore. If you drive it at night, you might not notice the small plaque near the entrance. It's in Spanish and Mandarin. The road was financed by a Chinese state bank, built by a Chinese contractor, and it connects a massive industrial park where Chinese electric vehicle manufacturers are setting up assembly lines to ship cars north across the border into Texas. The American government didn't pay for that road. American companies didn't bid on the contract. And when the ribbon was cut, no US officials showed up. But someone was paying attention, because that highway is not just a road, it's an artery. And it's pumping Chinese capital, Chinese technology, and Chinese strategic positioning into a country that shares a 2,000-mile border with the United States. Let that sink in. Mexico, the country Americans think of as economically dependent, politically subordinate, inevitably tethered to Washington, is quietly building an entirely separate economic relationship with Beijing. And most people north of the border have no idea it's happening. This isn't a story about betrayal. It's not about loyalty or ideology or who's the good guy. This is a story about memory, about what happens when a neighbor never forgets what you did to them, and about what happens when another country shows up offering something the first one never thought to offer: options. If you walk through the Chapultepec Castle in Mexico City, there's a hall most tourists skip. It's quiet. The walls are stone. And hanging on those walls are 6 portraits. Young faces, boys really, teenagers in military uniforms. These are the Niños Heroes, the boy heroes. In September 1847, American forces were storming the castle. These 6 cadets, all under 20 years old, refused to surrender. One of them, Juan Escutia, supposedly wrapped himself in the Mexican flag and jumped from the ramparts rather than let it be captured. Whether that story is literally true doesn't matter. What matters is that every Mexican schoolchild learns it. Every September 13th, the country commemorates it. The wound is institutional. And here's the part that Americans don't spend much time thinking about. That war didn't just kill soldiers. It erased half a country. In 1848, the Treaty of Guadalupe Hidalgo forced Mexico to sell what is now California, Nevada, Utah, most of Arizona, and New Mexico, and chunks of Colorado, Wyoming, Kansas, and Oklahoma, over 500,000 square miles, for $15 million. That's about 4 cents per acre. The land that would become Silicon Valley, Hollywood, Las Vegas, the oil fields of the Permian Basin. All of it was Mexican territory until it wasn't. Now imagine you're a Mexican president, any Mexican president since 1848. You wake up every day looking north at a neighbor who once invaded you, took half your land, built the world's most powerful economy on it, and then spent the next century and a half acting like the victim whenever you don't do exactly what they want. How do you trust that neighbor? You don't. You manage them. And the way you manage them is to make sure you're never completely dependent on them again. You diversify, you seek alternatives, you build leverage elsewhere. This is not paranoia. This is pattern recognition. Because 1848 wasn't the end of American interference. In 1914, US forces occupied Veracruz for 7 months. In 1916, General John Pershing led 10,000 troops into northern Mexico, chasing Pancho Villa. Throughout the Cold War, the CIA was widely believed to have meddled in Mexican elections, bankrolled candidates, and undermined leaders who didn't align with Washington. Mexico remembers all of it. There's a phrase attributed to Porfirio Diaz, who governed Mexico for much of the late 1800s and early 1900s. He supposedly said, "Pobre México, tan lejos de Dios y tan cerca de los Estados Unidos." Poor Mexico. So far from God and so close to the United States. Geography is destiny. You can't move the country, but you can choose not to let geography determine everything. And that's exactly what Mexico is doing right now. Now let's talk about what's actually happening on the ground. Because while historians debate the emotional legacy of 1848, economists are staring at a set of numbers that don't make sense according to the old playbook. In the year 2000, trade between China and Mexico totaled about $6 billion, Most of it was cheap consumer goods flowing south: toys, electronics, textiles. Mexico was a buyer, China was a supplier. Simple. Fast forward to 2024. That number is now $119 billion, a 20-fold increase in less than a quarter century. But here's what's remarkable, and what most American policymakers missed until it was too late. The trade isn't just growing, it's inverting. Mexico is no longer just buying finished products from China. Mexico is becoming the manufacturing base for Chinese companies trying to access the American market. Let me give you a specific example. BYD, the Chinese electric vehicle company that recently overtook Tesla as the world's largest EV manufacturer, announced in 2024 that it would build a $1 billion production facility in Mexico, not an assembly plant, a full production facility, stamping, welding, painting, final assembly, the whole chain. And it's not alone. NIO, Geely, and several other Chinese automakers are either building factories or scouting locations. Now, here's where it gets interesting. Under the USMCA, the trade agreement that replaced NAFTA, any car manufactured in Mexico can enter the United States tariff-free as long as it meets certain regional content requirements. So Chinese companies can't ship cars directly from Shanghai to Los Angeles without facing steep tariffs. But they can manufacture those same cars in Monterrey, slap a Made in Mexico label on them, and drive them across the border duty-free. The United States wrote that trade deal specifically to keep manufacturing in North America and protect American jobs. China is now using that exact same deal to bypass American trade restrictions entirely. And it's not just cars, it's semiconductors, solar panels, lithium batteries, consumer electronics. Entire supply chains are being quietly rerouted through Mexico with Chinese ownership, Chinese technology, and Chinese supply networks. But the final assembly happens just south of the border, so the goods qualify as North American. American officials are starting to panic. In 2025, the Biden administration floated new rules to tighten the definition of Made in Mexico, requiring higher percentages of truly North American content. But here's the problem. Mexico is pushing back hard. Because from Mexico's perspective, they signed a trade agreement. They didn't sign an exclusivity clause. They didn't agree to ban Chinese investment. They didn't agree to choose America over China. And now that Chinese money is flowing in, 50,000 jobs created in Nuevo León in just 3 years, massive battery plants employing entire towns in Coahuila, Mexico has leverage. When American officials complain about Chinese factories on Mexican soil, the response from Mexican workers is straightforward. Where were you when we needed jobs? B-roll. Factory workers clocking in, families in small-town plaza, kids playing, normal life. This is the thing that Washington keeps missing. For Mexico, this isn't about geopolitics. It's about paychecks. It's about towns that were dying, finding new life. It's about a government being able to tell its people, we brought investment, we brought employment, we brought growth. And when the United States offers nothing comparable, when American rhetoric is all about walls and immigration enforcement and lectures about democracy, Mexico looks at the two offers and makes a rational choice. China builds, America talks. But manufacturing is only half the story. The other half is infrastructure. And this is where China's long game starts to look less like trade policy and more like strategic embedding. Let me walk you through how this works. A state governor in Mexico needs a new port. Maybe it's Veracruz, maybe it's Lázaro Cárdenas. The existing facilities are outdated. Ships are getting bigger, the economy is growing, the port needs to expand, so the governor goes to traditional lenders, the World Bank, the Inter-American Development Bank, maybe US development finance agencies. And here's what happens. The application process takes 2 years. Environmental impact studies, anti-corruption certifications, labor standards compliance, transparency requirements, and even after all that, the funding might get delayed or reduced because of shifting political priorities in Washington or concerns about governance in Mexico City. B-roll, bureaucratic paperwork, stacks of forms, someone waiting in an office, clock ticking. Then China shows up. We'll fund it. We'll build it. We'll have it operational in 3 years. Low interest rates, long repayment periods, no lectures. For a governor trying to deliver results before the next election, for a politician whose career depends on showing visible progress, it's not even a difficult decision, and the terms seem reasonable. Sometimes the contracts allow repayment in commodities instead of cash. Mexico has oil. China needs oil. The math works. But here's what happens over time. The port gets built. The contractor is Chinese. The equipment is Chinese. The financing is Chinese. And when something breaks 10 years later, when the cranes need maintenance, when the software needs updating, when capacity needs to expand again, guess who you call? Not an American company, not a European firm. You call the same Chinese contractor who built it in the first place. It's vendor lock-in at a national scale. B-roll, Port of Veracruz, Chinese contractors in hard hats, equipment with Chinese characters, slow pan. Look at the expansion of Veracruz. Chinese firms built the new container terminals. Chinese state banks financed the project. And now a significant portion of the goods flowing through that port are Chinese imports heading to Mexican markets or being transshipped to the United States. China didn't just build a port, they built a logistics node for their own supply chains. Or look at telecommunications. Huawei, the Chinese tech giant that US intelligence agencies have spent years calling a security threat, provides 5G equipment to Telcel and AT&T Mexico. American officials have been warning about espionage risks for half a decade, but Mexico's response has been lukewarm at best. Show us the evidence, and if you want us to use American equipment, make it as cheap and as reliable as Huawei. The United States can't compete on price. Cisco and Ericsson are significantly more expensive. And Mexico's priority is building infrastructure, not satisfying Washington's geopolitical anxieties. So the networks get built with Chinese hardware. And once that happens, switching becomes prohibitively expensive. The entire system is integrated. You're locked in for decades. B-roll, cell tower with Huawei branding, technician working, network operations center with Chinese equipment. This is the Belt and Road playbook. China doesn't need military bases. It doesn't need troops. It just needs to build the roads, the ports, the power grids, the telecom networks. Because infrastructure is power. Infrastructure is control. Infrastructure is the foundation of economic dependency. And it's happening 100 miles from the Texas border. American officials talk about offering alternatives. The Build Back Better World Initiative, the Partnership for Global Infrastructure and Investment. But these programs are slow, they're bureaucratic, they come with conditions, and most importantly, they haven't delivered results at anything close to the scale or speed that China has. So Mexico makes a pragmatic calculation. China builds, America talks. And when you need a metro line today, not in 5 years, you go with the country that delivers. The pattern is global. Sri Lanka got a port and ended up leasing it to China for 99 years when they couldn't repay the debt. Pakistan got highways and railways. Djibouti got a logistics hub and now hosts China's first overseas military base. And now Mexico is getting infrastructure across multiple sectors: roads, ports, energy, telecommunications. The model works, and China is replicating it in America's own hemisphere. So how does Mexico navigate this? How do you manage a powerful neighbor to the north who expects loyalty and an ambitious economic partner across the Pacific who's offering what that neighbor won't? The answer is strategic autonomy. And two leaders have embodied this approach with remarkable consistency. First, Andrés Manuel López Obrador, known universally as AMLO, who served as president from 2018 to 2024. And second, Claudia Sheinbaum, a scientist and former mayor of Mexico City, who took office in 2024 as Mexico's first female president. Both have pursued the same delicate balancing act: cooperate with the United States on security and migration, trade with China on economics, and refuse to be forced into choosing one over the other. B-roll, AMLO at podium, Sheinbaum at inauguration, split screen, calm, deliberate. When AMLO came into office, the Trump administration was demanding that Mexico act as a buffer against Chinese influence. The message was explicit: you're either with us or against us. AMLO's response was diplomatic but unambiguous. Mexico is a sovereign nation. We decide our own trade policy. And then he proceeded to do exactly that. On security, AMLO deepened cooperation with Washington. The Mexican National Guard was deployed to the southern border to slow Central American migration. Joint task forces targeted cartel operations. On paper, US-Mexico security cooperation looked strong, but economically, AMLO opened the door wider to China. In 2023, he welcomed a high-level Chinese delegation to discuss lithium mining. Mexico has some of the largest lithium reserves in the Western Hemisphere. AMLO had already nationalized the lithium industry to ensure state control. But he also signaled that Chinese companies could participate in extraction and processing as long as Mexico retained sovereignty over the resource. American officials were furious. Lithium is critical for batteries, electric vehicles, renewable energy. The US wanted preferential access. AMLO gave them the same terms he offered China: equal treatment, no favorites. B-roll, lithium mining site, dusty, remote, workers in safety gear, Chinese and Mexican flags on site office. When Claudia Sheinbaum took over in 2024, many wondered if she would shift closer to the United States. She's more technocratic than AMLO, more pragmatic, a scientist by training. But on China policy, she's held the line. In her first major speech as president, Sheinbaum said this: Mexico will not participate in a new Cold War. We will trade with everyone, we will cooperate with everyone, and we will subordinate ourselves to no one. It was a clear signal. Mexico is not picking sides. Sheinbaum has continued to approve Chinese EV factories. She signed infrastructure deals. And when US officials express concern, her response is consistent: show us a better offer. And that's the key. Mexico isn't choosing China because they love China. They're choosing options because dependence on any single country is dangerous. The lesson of 1848 still applies. Never put yourself at the mercy of one power. For the United States, this is frustrating. We're your neighbor. We're your largest trading partner. We share a 2,000-mile border. How can you treat us the same as China? But for Mexico, that's exactly the point. Treating everyone the same is sovereignty. Giving the US special privileges is subordination. B-roll, handshake between officials, Mexican, Chinese, American flags, diplomatic setting, equal framing. And here's the uncomfortable truth for Washington. Mexico doesn't need to love America. They just need to manage it. And right now, balancing the US and China is the best way to do that. So why should anyone outside of Mexico care about any of this? Why does it matter if a country of 130 million people diversifies its trade relationships? Because this isn't just about trade deals or factories. This is about the fundamental power structure of the continent, and it's shifting in ways most people haven't noticed yet. For the last 75 years, the United States has dominated the Western Hemisphere. The Monroe Doctrine, declared in 1823, essentially said the Americas were off-limits to European powers. After World War II, that extended to any foreign power. Latin America was America's sphere of influence, and Mexico, sharing a 2,000-mile border, was the anchor of that influence. But that's changing. China is now a major economic presence in Mexico. And if current trends continue, China could become Mexico's largest trading partner within the next decade, not just in specific sectors, overall. And when that happens, the geopolitical implications cascade. B-roll, Western Hemisphere map, lines connecting Mexico to China to US color-coded trade flows, animated. First, it changes the migration dynamic. One of the biggest drivers of Mexican migration to the United States has always been economic. People leave because there aren't jobs. But if Chinese factories are creating employment in Mexico, if industrial parks in Monterrey and Querétaro and Guanajuato are hiring tens of thousands, that reduces the push factor. Ironically, China's Belt and Road investments in Mexico might do more to reduce migration pressure on the US southern border than any wall ever could. But here's the flip side. Those jobs come with Chinese influence, Chinese managers, Chinese supply chains, Chinese business practices. Over time, that shapes the Mexican economy in ways that favor Beijing, not Washington. Second, it complicates US national security. The southern border is no longer just about migration and drugs. It's now about economic competition. Chinese companies operating 100 miles from Texas means Chinese technology, Chinese data collection, Chinese logistics networks embedded in North America. US intelligence agencies are reportedly concerned about Huawei equipment in Mexican telecom networks. If Mexico's 5G infrastructure runs on Chinese hardware and that infrastructure connects to US networks, there's a potential vulnerability. Mexico says the concerns are overblown, but the United States doesn't have many options to counter it. B-roll, border infrastructure, data centers, fiber optic cables being installed, technical, clinical. Third, it sets a precedent for Latin America. If Mexico, America's closest neighbor, can diversify away from US dependence and embrace Chinese investment without consequences, other countries will take note. Brazil is already doing it. Argentina is considering it. Chile, Peru, Colombia, they're all watching Mexico. And if the trend spreads, the entire Western Hemisphere could become contested space between the US and China. Not militarily, economically. The United States is facing a strategic dilemma. If they pressure Mexico to decouple from China, they risk pushing Mexico further away. But if they do nothing, Chinese influence grows unchecked. And here's the problem. The United States doesn't have a compelling counteroffer. American companies aren't investing in Mexican infrastructure at the scale China is. American trade policy is focused on protecting domestic industries, not integrating with Mexico. And American political rhetoric about Mexico is often hostile, which doesn't exactly build goodwill. B-roll, empty factory. For lease sign, American Rust Belt imagery, contrast with Mexican growth. So Mexico looks at the two offers and makes a rational choice. China is offering investment, no political strings, and respect for sovereignty. The United States is offering lectures, threats, and demands for loyalty. Which would you choose? The irony is almost painful. The United States spent decades pushing free trade, open markets, economic integration, and now China is using those same principles to outcompete America in its own neighborhood. The rules America wrote are being used against it, and the clock is ticking. Every Chinese factory that opens in Mexico is a 20-year commitment. Every infrastructure project is a 30-year dependency. The longer this continues, the harder it becomes to reverse. The power balance of North America is shifting, and the United States is losing ground in its own backyard, not because of military conquest, because of economic strategy, and most Americans don't even realize it's happening. Let me step back for a moment and show you the pattern. Because what's happening between Mexico and China right now is not new. It's a pattern that has repeated across history whenever a dominant power takes a smaller neighbor for granted. The dominant power assumes loyalty, they assume dependence, they assume that proximity equals subordination, and then they're shocked, genuinely shocked, when the smaller country looks elsewhere. It happened with Cuba in 1959. The United States had treated Cuba as a client state for decades. Then Castro came to power, nationalized American assets, and turned to the Soviet Union. American policymakers couldn't understand it. We're 90 miles away. How could they choose Moscow over Miami? B-roll, archival footage, Cuban Revolution, Castro speeches, Soviet ships arriving. But from Cuba's perspective, the choice made perfect sense. The United States had supported dictators, had dominated their economy, had treated them as subordinate. The Soviet Union offered an alternative, same pattern in the Philippines. For decades, the US maintained massive military bases there, Subic Bay, Clark Air Base. The relationship seemed ironclad. Then in the 1990s, the Philippine Senate voted to kick the Americans out. Washington was stunned, but from Manila's perspective, it was about sovereignty, about not being taken for granted, and now it's happening with Mexico. The mistake Washington keeps making is assuming that geography determines everything, that because Mexico shares a border with the United States, it has no choice but to align completely with American interests. But geography is just one variable. Memory is another. Sovereignty is another. Self-interest is another. And when those variables are weighted together, Mexico's choices start to make a lot more sense. B-roll, slow zoom on map. US-Mexico border, lines connecting to Beijing, the network emerging. Here's the belief shift I want to leave you with. Loyalty is not owed, it's earned. And the United States has spent the last 175 years acting like Mexico owes them loyalty, while doing very little to earn it. China isn't earning Mexico's loyalty either, but they're not asking for it. They're offering a transaction, investment for access, infrastructure for influence, no speeches about democracy, no demands for ideological alignment, just business. And for a country that's spent nearly 2 centuries being lectured by its northern neighbor, that transactional clarity is refreshing. So here's where we are. Mexico, America's closest neighbor, is building an economic partnership with China, not because they love China, but because they don't fully trust America. And 175 years of history explains why. The Treaty of Guadalupe Hidalgo took half their territory. American intervention shaped their politics for a century. And today, Mexico is making sure that never happens again. The way to do that is simple. Never depend on one country. Always have options. China is providing those options. 119 billion in trade, EV factories, infrastructure projects, no political demands, no lectures, just business. And Mexico is taking the deal. B-roll, modern Mexico, clean cities, new infrastructure, economic growth, upward momentum. The implications ripple across North America. The US southern border is now an economic competition zone. Chinese technology is embedded 100 miles from Texas, and the precedent is set for the rest of Latin America. If Mexico can balance the US and China, so can everyone else. The United States has a choice to make. It can offer Mexico a better deal, real investment, real partnership, real respect for sovereignty, or it can keep lecturing, threatening, and demanding loyalty. Because here's the truth. Loyalty isn't owed, it's earned. And right now, China is earning Mexico's business, while America is losing it. So the question isn't whether Mexico will choose China over America. The question is whether America can compete with what China is offering. Can the United States match Chinese investment? Can it build infrastructure as fast? Can it offer trade terms as attractive? Can it treat Mexico as an equal partner instead of a subordinate neighbor? If the answer is yes, then the US-Mexico relationship can be rebuilt. If the answer is no, then the power balance of North America shifts permanently. B-roll, split screen. American officials in suits, talking, Chinese construction crews, building, the contrast. And here's the final thought, the one that should keep American strategists up at night. This isn't just about Mexico. This is about how the United States competes globally. If America can't hold its influence in its own hemisphere, in its own backyard, how does it expect to compete with China in Asia, Africa, or Europe? The world is watching, and Mexico just showed them that there is an alternative to American dominance, a model where smaller countries don't have to pick sides, where they can trade with everyone, where sovereignty matters more than alliance. That model is spreading, and it's changing the global order in ways that Washington hasn't fully grasped yet. B-roll, final shot, globe. Mexico highlighted, lines connecting outward, the network expanding, slow fade to black. So where do you think this goes next? Will the United States step up and offer Mexico a better deal? Or will China lock in its position for the next generation? Drop your thoughts below, because this story is just beginning.